Thank you very much, Samson. I wonder if you can hear me. I have a bit of a difficulty. I'm traveling, so I'm not using my usual equipment. Are you able to hear me?
Very clearly, sir.
Okay, wonderful. Are you also able to see my screen, sir?
It should be projected shortly. Yes,
okay.
Go ahead.
Wonderful. So I think the challenge here is that we had a summarized version of the report and something that is like a white paper issued by the president, if you recall. So what I'm trying to explain today is whether or not the KPMG report itself, having been issued now, makes a difference. We have to first recognize that KPMG's undertaking, the work that KPMG did, had 3 or more different components. You had a fact finding. Essentially, they went through a research process to establish key facts. They also made some reasoned judgments from those facts, inferences, and then they made opinions. Our position, those of us in civil society, particularly those that have been involved in this matter from the beginning, based off the work that Fourth Estate started with ISEP, our view is that the fact-finding exercises were thorough and useful, but we do not agree with the inferred judgments that were made. And if you give me a few minutes, I will explain how the facts that were established in the report, that were uncovered in the report, do not always support the conclusions that were made, and why, therefore, it was extremely important that the president release this report. And the president should not have waited until the Media Foundation for West Africa filed an RTI, a right to information request, essentially compelling him to release this report. Because without this report, we would not have been able to find the very critical information that we now have that established clearly that some of the conclusions that were reached were actually unnecessary. All we need are the facts. And if you get the facts, you come to the conclusion that this was a very problematic issue. To recap, there were 7 contracts covering 4 services. Of those 4 services, one of them, the upstream petroleum monitoring and the minerals and mining monitoring. So essentially, the monitoring of the oil that we produce in Ghana and the monitoring of the gold and other minerals we produce in Ghana were not active as of the time of this investigation. So essentially, only 3 of the services were active. Of those 3 services, one was in respect of how to prevent importers bringing goods in this country from lying about how much they paid for those goods overseas. The second was to prevent GRA itself from using assessment or making assessments that were not in line with what the invoice information about those imported goods suggest they should have assessed those duties to be. So essentially, you bring in some goods from overseas, GRA is responsible for determining the duty you should pay based on a number of factors. SML's role was to look over the shoulder of GRA to make sure that the declarations they are making about how much you should pay in duty are correct. So keep in mind these 2 key services. How much did you pay for the item, which will impact the duty, and then whether or not, based on the assessed value of how much that you pay for it, the duty that you are due. Also, of course, based on a number of laws and other rules, whether that duty is correct. So those are the 2 services. And the third service was to monitor the sale of petroleum fuels like gasoline and the like in the market, what we call petrol, and to make sure that the people that sell the petrol are paying the right prices. So these are the key areas. Now, here are the discrepancies between what the president told us in his white paper and what we now know from having read the full 300 and something page report by KPMG. Number one, the amount of money that KPMG established that this company was paid was significantly more than what the president told us. The president told us they were paid about 1 billion cedis. In actual fact, they were paid about 1.4 billion cedis.
Right.
The discrepancy there is obviously because the presidency decided that the tax amount should not have been included. This is confusing because if you recall, the company itself kept saying that the amount that the president stated, based on the summarized version of the KPMG report, does not take into account the taxes that they had paid.
That's right.
So that's an important point. The truth of the matter, though, is that actually the number that the president gave us already took into account the taxes that have been paid. But bear in mind the amount that I'm talking about, 1.4 billion cedis. That amount is in actual fact more than some of the loans that we get from the World Bank, which sometimes lead to fisticuffs and other unpleasant sights in our parliament because of the sheer importance of our current, the sheer precarity of our current debt situation. So you have to bear in mind the context in which we are speaking. We're talking about a huge amount of money. Money that typically we have to go to the World Bank to borrow. The key principle here is that the money that the president mentioned in this report was net of taxes. So this company actually received more than that amount that was stated in the report. The second critical element, and that critical element is tied to this first point, is that this company actually owes the country taxes. So in addition to receiving all of this money, there is about 31 million cedis in withholding taxes and VAT that this company has still not paid. And that fact was also not in the president's report, because one will have assumed that this is a material point, that this is a company that owes Ghana, and for which reason we have to be worried about that. The second issue is whether or not this amount of money was in actual fact deserved. Did they really do any work for which reason we ought to pay them 1.4 billion Ghana cedis?
Right, just a second intervention. Did you say over 30 million in taxes or 13 million?
So it's 30 million. So if you look at the
13.38.
No, there's 13.38. But when you look at the total amount of both the VAT and the withholding, it amounts to about 31 million cedis thereabout.
All right.
And you can quote the exact page in a minute. Give me a second. Let me just run through this and then I'll come back to that point.
That's okay.
The issue around whether or not this company deserves this money is, of course, at the heart of this. Because if, of course, Ghana had derived value from this, there will be no problem. If you recall very carefully, a lot of the analysis was based on the view that until this company came in, GRA did not know how much petroleum these companies that sell the petroleum, let's just use petrol to make it easier. The companies that sell petrol in this country, they lie about how much they are selling. And if you lie about how much you are selling, you also lie about how much taxes you pay. But the taxes are on the volumes. Now, the truth of the matter is, when you look carefully at the report and I read the entire report, it becomes apparent that all of this confusion is just simple, logical analysis gone wrong. And I will explain in a moment. So what you are seeing on the screen now is essentially the argument that has been made that until about 2020, when this company came in, GRA was declaring volumes of petrol sold on which taxes have been paid. That was just a little above half of what it should have been. And then, since this company came in, the amount of fuel that GRA is declaring is now closer to what actually comes into the country. So the first logical flaw there is that we know how much fuel comes to the country, because that is how we're able to compare what GRA is using to charge taxes and what actually should have been the case. So the MPA data has never been in dispute. In fact, the gap that we claim is the result of under declaration, which this company is solving. That gap comes about because we know from MPA what the fuel amount should be. So that's the first logical flaw, which tells us that it's not about not knowing about the amount of fuel in circulation. It's about some companies being able to evade tax, even when we know they pick up the fuel and sold it. So that's the first logical flaw. The second logical flaw, which comes from the reporting, is that GRA had challenges with its information because initially it was reliant on what the companies declare in their tax filings. Now, that problem is a very simple problem. It came about because until August 2018, there was no connection between the data that we get at the ports through a system that now we call ICAMS, and before then had different names, including GCMS. And it was managed by a company called GCNet, and is today managed by a company called GhanaLink. Now, that particular system gives us indication as to how much petrol is coming to the country. Now, until this matter changed, until this development occurred, which you've seen on the screen, there was no connection between that platform, the port system, and the GRA system. And it's only in August 2018 that an attempt was done. And then soon thereafter, the companies that were involved were kicked out. or attempts were made to kick them out. And in the process of attempts being made to kick them out and trying to transition between that system and the new system called Ghana Link, we had a gap period. Now, if you look at it very carefully, it's in 2020 that this new ICUMS or ICAMS was integrated fully into the GRA system. Now, when you go back and you look into the KPMG report and you look at the discrepancy period and then the non-discrepancy period, it becomes extremely apparent that the only thing that was missing was this integration. Let me explain very carefully. What you see on the left-hand side of the screen, where it says pre-SML, is the period before SML was engaged. And what SML has been trying to convince us is that this gap between what GRA used to, the information GRA has, and the information NPA, which is the main regulator, has, was due to under-declaration. And then what you see on the screen, the green and the blue, is when they came into the picture and they are trying to prove to you that there was a convergence. That gap vanished. What I'm trying to explain to you is that the red line that you see in the middle is the period during which is April 2020, is that period when ICAMS was integrated into GRA's platform. And if you see it carefully, you see that it comes before May 2020, when this new company, the black line that you see, the black dotted line, when this company came. So you see that the convergence, the green and the red, converging together appears before SML actually comes to the picture. Yeah. And that's what we see in the KPMG report on page 157.
Right.
And that line you see is the dates or the period in which ICAMS, which is at the port, was integrated into the GRA platform. So it tells you clearly that before SML was brought into the picture, that convergence, that narrowing of the gap between the green line, which represents the MPA data, and the red line, which represents the GRA, had already happened. You can see it clearly now. And this is in page 157 of the KPMG report. And this information the president refused to share with us. Another thing that you also see in the KPMG report that the president refused to share with us, and why, therefore, Media Foundation for West Africa and Four State had to force him to do so through the RTI process, and which, if that had not happened, we would not have known, is the fact that actually KPMG already told the president that a lot of the increases in revenue we saw was not due to SML's work, but was due to the fact that tax rates were changing. Of course, prices of petroleum have also been changing. So if petrol prices go up over time, and then you have ad valorem taxes, those ad valorem taxes will go up.
Common
but you have
sense.
specific taxes. If the taxes themselves go up, then the volume will go up. And that is also in page 158 of the KPMG report, which the president refused to share with the people of Ghana. So that information was captured, but was not shared. So what you have to bear in mind, as I explained at the very beginning, is that we have fact-finding, and then we have inferences from the facts, and we have opinions.
Right.
What we are saying is that rely on the facts, and if you rely on the facts, it comes to the conclusion, you come to the conclusion clearly that the SML contribution was useless. Another critical thing that I'm going to wrap up very soon, another critical thing we learn in the report, which the president doesn't tell us, is that the SML flow meters, you remember those ultrasonic flow meters they say they went to put in the various depots and therefore prevented the companies from lying to us? Well, in the report, if you look carefully at the findings of KPMG, it turns out that those devices were not working, because some of the companies, or actually more all of the companies, tend to flush the pipes with water. So that confuses the readings. So throughout the period in which these flow meters were installed, they were not effective, and nobody was using that data for anything, because you couldn't use it for assurance. There were discrepancies. It was in August 2023, years after they started, that they decided that because the flow meters don't work, they're going to put what we call automatic tank gauges. And then they started to establish them. They only managed to put 5 of them in place, all of them in the government-controlled depots, which is bust, where we have the least problems if our assumption is that it's private companies that are cheating the government. So in effect, nothing that SML did during that period contributed anything whatsoever to the under-declaration. The fourth critical thing we also learned from the report is that GRA did write to the Ministry of Finance and asked the Ministry of Finance to conduct a value for money analysis in order for this to be established, whether or not, because remember, this whole deal was imposed on GRA. It was imposed on GRA by the Ministry of Finance. So the question was, GRA then said, or rather the development was that GRA wrote to the Ministry of Finance as late as far back as 2021, asking them to conduct a value for money analysis in order to establish whether or not this service was delivering any benefits. What we know is that they refused to do it. They wrote letters back saying they were going to do it, and they never did it till now. And the last point, which is actually very fascinating, is that in the KPMG report, we learned that some of the services that SML provided, particularly the ones to do with trying to prevent importers from lying about the prices of the goods that they buy, which will affect the duty, and trying to prevent GRA officers from lying about the right duty they should impose, those services, the database around the price information, that database that was being charged for the TVAs was being charged at an astronomical cost. We ended up paying over $15 million, nearly $16 million, $16 million, when in fact you have alternatives on the open market, which will have cost us barely $20,000. So keep that in mind. We ended up paying nearly $16 million to help, for these companies to apparently help us prevent importers from lying about the prices of the goods they bought overseas to sell in this country, when we could just have simply subscribed to commercial databases and paid less than $20,000 or thereabout for the same information. Thank you very much, Samson.
Just one question for you, and many Ghanaians are asking, what's the end game? What should be the end game on the back of this report? Okay,
several. One, we need a complete overhaul of the single sourcing regime in this country. It is clear that 90% of the time when they use this single sourcing method, they have something to hide, and it leads to losses to the country. So that's number one. Number two, we need to look carefully at the entire revenue assurance logic in this country. We have a situation where in telecoms, we have a company called KMGVG that is supposed to be keeping the telecom companies honest. We don't have any evidence whatsoever that the presence of this company that takes millions of dollars every month has led to any gains to the state. We collect maybe $100 and something million in taxes, and we end up paying almost $30 million to a company to collect it. What is the point of this logic? So revenue assurance is a problem in the petroleum sector, in the downstream sector. We have a number of other initiatives of this kind. We need now to initiate a branch, stem, and root evaluation of the benefits of all these systems and then act accordingly. Thirdly, it was very clear that the contracts as it currently, the contracts as they currently exist, the consolidated contract, is not in Ghana's interest. We also know that we spent a lot of money buying some equipment and software and things like that. I think it is now time for the government to be very clear and upfront with us. How does it intend to extract value from the existing software and the hardware that were established? GRA has come out to say that it intends to implement the president's recommendations. But those were not recommendations. As I was trying to explain, the president's recommendations are at variance with what were in the report. So we now need a proper independent commission by people that have absolutely no interest in this matter and have the right credentials and the like of it, to come up with a real roadmap as to how we extricate ourselves from this really damaging situation that we find ourselves with SML. We pay so much money for nothing gained. And then we've created a room for potential judgment debts. So we need a very careful, thoughtful process to extricate ourselves. And then lastly, we have to ask ourselves, why is it that some people are able to go get away with not paying taxes in the petroleum sector? What are the political arrangements that are there that assures them and give them protection? These are all matters that have come out from this report. And I think that as a country, we need to be bold, daring, open-minded, and willing to really have a go at this so that we solve it permanently and not have this recurrent problem of people just taking our money for nothing.
Thank you very much, Bright. And Bright, I realize also, maybe final question to you, that you are concerned about the posture of the presidency in declining or refusing the request to release the full documents. And you find that even when it is being released, now the presidency obviously struggles to explain. So it dedicates over a page or so to explain its defense, why it did not release the report. Why is that an important point for you?
The truth of the matter is that when the president commissions these kinds of reports, if they come from institutions that have access to national security information and the likes of it, you could make the argument that they are privileged. So, if, for instance, this had been an intelligence report based on investigations into, how the tax evasion was happening in the first place, or if there was suspected corruption and the president needed a preliminary basis, then you could make the argument that this is privileged information because the president is being guided on matters that at that very point it's not meant for public engagement. This was a very different situation. This was a matter that was already in the public domain.
Right.
This was a matter where the president himself had advised, had informed the public that was conducting this study in order to address the public controversy. Remember, thirdly, KPMG is not an organization that has national security or other types of clearances, for which reason information it handles can be properly called privileged. All the information that KPMG collected are information that ought to be in the public domain. Information about whether or not a particular system that is supposed to be helping with assurance in the downstream petroleum sector, whether or not a transaction services, audit service, etc., is working, are technical matters, and in the act, we call them factual and statistical for the most part. So the argument the president made that they are privileged is extremely shaky. The argument is on very shaky legs.
Right.
Because if you look at the report as it's been currently disclosed, what about this report is classified? What about it is classified? Everything in this report is meant for the public. So my view is that it's not a matter of blanket privilege to say that every time I'm advised, that advice must remain a privilege. It must only remain privilege if the people that are advising you have reasons for which the public should not be informed. And I don't think this is the case in this scenario.
Okay. Thank you very much.